Give me your take. How do we get from a $13.97 to a $16.50 on the stock?
I think one of the things that was most compelling to us, Taylor, was both the change in regime with Sundar basically stepping in as CEO and chairman, but something that I think a lot of investors may have missed. His compensation agreement was filed with the SEC on December 20th, and what struck us most compellingly was he basically is compensated on the percentage of the percentage differential that Google stock does relative to the S&P 100. And he's basically got a $45 million tranche on plan for stock performance in 2021, a second $45 million for 20 through 22. So it's pretty refreshing and encouraging to see alignment between management and stock performance from a company that has just historically taken a very very different approach to working with the street.
Yeah, so what do you think he can do that the former founders of Alphabet could not do?
It's not so much, I think, what they couldn't do. I think it's just this philosophy that they just had of we're smarter than the street. We basically are going to beat to our own drum. And, there's just no need to do anything different than what we're doing. Fast forward, if you look over the last couple years and you see the kinds of disclosures we've seen out of companies like Amazon, Netflix, Alibaba, where you're able to see in the example with Netflix that they basically have been running at losses until quite recently internationally, but a pretty wide gap with domestic margins. If you didn't have that disclosure and you didn't understand what was going on, you would have seen this big push into international that would have been a drag on margins. Take the case with Google, where we're pretty positive on Thomas Kurian. We have been since we initiated on the company. Saw that he was basically quoted at in the April timeframe in an interview with the Journal, basically saying that they were around 10 to a 15th the size of Azure's and AWS's Salesforce, and his intention is to basically get it to be half of their size within 2 years. That's expensive. So if you actually hold investors' hands, you help them understand what you're doing revenue-wise with GCP, what the margin drag is. It allows people to better understand the moving pieces in the business.